I've got 3 reasons why, generally speaking, you should not withhold income taxes when doing Roth conversions. Hi, this is financial planner Sean Mullaney. Let's discuss. So Roth conversion planning is all the rage today, right? Maybe it's a backdoor Roth IRA where we really don't pay pretty much any tax, or maybe it's just plain old taxable Roth conversions where we are in a relatively low tax bracket and we're affirmatively moving money from traditional retirement accounts over to a Roth account. And what we're trying to do is get that money taxed when we think we're at a low tax bracket, right? So Roth conversion planning is all the rage today. And I think there's an implementation issue that folks should consider. It's this: should you have any income tax, federal and or state, withheld when you do the Roth conversion? And to my mind, there are 3 main reasons why in 99% of cases, maybe more, generally speaking, you should not have income tax withheld. You got to do your own analysis, but I'll walk through my 3 factors. The first factor is this: what folks generally do when they're doing a taxable Roth conversion is they sort of add up their income and deductions for the year, late in the year usually, but it could be early in the year based on estimates. And they say, I've got maybe room for a $40,000 Roth conversion before I hit the next tax bracket. So before year end, I'm going to pull the trigger. I'm going to move $40,000 from, say, a traditional IRA into a Roth IRA. And the first reason I think, you shouldn't have income tax withheld on that is get the most bang for your buck. You're doing 2 things when you do Roth conversions that are fully taxable. The first thing is you're reducing the value of your traditional retirement accounts, which means in the future your RMDs will be lower and any inherited IRA is going to be less tax adverse to your beneficiaries. That's the first thing you're doing, and getting the $40,000 out with or without withholding, great. You've achieved that goal. But the second goal is to get that money in Roth accounts. Let's say you withheld 10% on that $40,000. That's $4,000 that goes to Uncle Sam rather than to a Roth IRA. You'd rather that $4,000 in most cases just go into the Roth IRA, right? You want no withholding because you want all $40,000 to get into that Roth IRA so it can grow tax and penalty free. We really like that. So that's the first reason. Just get the most bang for your buck whenever you do a Roth conversion. Get all of it into the Roth. The second reason applies if you're under age 59 and a half. Here's the thing: all Roth conversions are penalty free. Doesn't matter if you're 2 years old or 100 years old. The early withdrawal penalty, if you're under 59 and a half, does not apply to a Roth conversion, but that means the money's got to get into the Roth. It can't go to Uncle Sam. It can't go to the state income tax authority, right? So if you have tax withholding and you're under age 59 and a half, you're setting yourself up for an early withdrawal penalty on the amount that goes to the government. So, that's a big reason. If you're under 59 and a half, we really want to avoid any income tax withholding on a Roth conversion. We want all that money to get into a Roth IRA, Roth 401k if it's in plan, that sort of thing. Okay. And then the third reason is, well, what if you're doing a backdoor Roth IRA? I've talked about the backdoor Roth numerous times on this channel. The thing about the backdoor Roth IRA is if it's properly structured, it should not create any material income tax, federal or state. So why the heck would you withhold for a tax that's not even going to be due, right? So there are other ways to get that tax paid, right? For those who are still working, still have a spouse working, W-2 withholding is a way to do it. There's always estimated tax payments. That's another way to do it. And then a third way to do it is to later on, go into a retirement account. It's, a traditional IRA, say, and have a distribution that has a large percentage of withholding. So you sort of true it up to get to the coverage for the Roth IRA. But again, if you're 59 and a half, that's probably not a good idea. If you're over 59 and a half, that might be a good idea, right? So the big thing is, unless you have a very specific reason and you're avoiding the 10% early withdrawal penalty, there's very little reason to have federal or state income tax withholding when we do Roth conversions. Hope you enjoyed this video. If you did, please smash that like button and subscribe to my channel. I'll see you next time.